As the auto market converts to electric vehicles, one of the things that is being noticed as a difference is the insurance claims process. If you have a traditional gasoline or diesel internal combustion engine vehicle, the engineering and design of that vehicle is such that if there's a collision, if there's an accident, the engine and the powertrain is separate from the body and the frame. With electric vehicles, the engineering integrates those two components more tightly so that the battery and the powertrain are more integral to the frame and the chassis. Matter of fact, in some electric vehicles, the battery is actually part of the chassis. It's in the floor pan of the vehicle. So when you have an accident, it's more likely to actually not only damage the physical structure of the vehicle, but it also may damage your powertrain. Because of that, they're finding that insurance claims and damages on electric vehicles is a lot higher. Here's an article from the insurance industry, which talks about how many large insurance companies, if they have an accident on a Tesla, they just write it off. They don't try to fix it. They don't try to salvage it. They just do a total loss claim. Now, that may or may not be good for the vehicle owner because, in theory, you get a new vehicle. However, there's some downsides even to the vehicle owner. What happens is, first of all, if you're buying a vehicle that has a higher history of insurance claims, even if you don't have a claim, they're going to have to price your policy premium commensurate with the claims history, their claims exposure. So if you have a vehicle that, let's say gets in a typical accident and it costs $4,000 to fix, your insurance premium will be based on that claim amount. If you're driving a vehicle where they have to total the whole car for $30,000, your insurance premiums are going to be at that level. In fact, there are some cars that you can't get insurance on anymore. It's a little bit different story, but some Hyundais and Kia models are being canceled for insurance by insurance companies because they're getting stolen too much. So excess claims can affect owners even if they don't have any type of claims. How else can it affect you as a vehicle owner? Well, in most cases, if your car is totaled, they give you what's called actual cash value or market value for the car. They don't buy you a new car in most cases. So if you have a Tesla and or any car really, this article you're looking at is about Tesla, but any car that your vehicle is totaled and let's say the ACV is $28,000 minus your deductible, they're going to give you that amount. Now you have to go out and buy a new car, right? It's not going to be the same price. You're going to have to come out of pocket the difference to get a new vehicle. So you don't want a vehicle that's easily totaled. If your car was damaged and they can fix it for $3,000, they can repair it and you can keep driving your used car without having to come out of pocket. Maybe only your deductible, $500 or $1,000. So why is this happening? Well, they did some analysis of vehicles that had accidents, and Reuters did this study, and they found crash low mileage Teslas at salvage auction houses. The two main auctions for insurance distribution of vehicles are Copart and IAA. These are the two main auctions, and we deal with them a lot. And they went through and they found that a vast majority of salvaged and sold Teslas found that they had less than 10,000 miles before the collision and being totaled, right? So these are low mileage cars. These are cars that have high value. It's not like it's an old beat up car that any kind of damage makes it total. These are high value vehicles. In fact, the retail prices were $60,000 to $80,000. So imagine what kind of damage you have to imagine on a vehicle for it to have $60,000 worth of damage. Well, what they found on a couple of them was one was involved in a front-end collision, and the other one had a collision on the body of the vehicle, and it was totaled, right? All but one had fewer than 10,000 miles, and these were serious issues. Now, here's another problem with the insurance practicality of electric vehicles. What happens is when a vehicle is damaged, the insurance company pays a claim. If they repair the vehicle, let's say they do an estimate and the repair is $8,000 to fix it, let's say, and their vehicle is repaired, and then a year or two or three later, the vehicle starts to develop mechanical problems because of that repair. The owner the insured can go back to the insurance company and do a supplemental saying, hey, wait a minute, this repair didn't fix my car, right? You repaired the body damage and part of the battery, but the engineering of that car is off. The frame is bent. The alignment is off. Maybe the rest of the battery cells were impacted by the collision, so they're not charging the right way. So here's my car back, fix it. Insurance companies are very skittish about the long-term exposure of these vehicles. In fact, even the ones that they're totaling and taking back and selling at auction, they're doing something with them called certificate of destruction. Certificate of destruction. So normally, when an insurance company pays a total loss claim, let's say your car is a $60,000 car, they total your car, they give you, the owner, a check for $60,000, total your car. Now, the insurance company now becomes the owner. You don't get to keep your car if it's totaled. The insurance company now owns the car, and they sell these cars at Copart or IAA or one of the other auctions. When they sell them, they usually sell them with what's called a salvage title. That means somebody can buy it, fix it up, put it back on the road, and it's got a salvage history. However, what we're seeing with more and more of these electric vehicles is that they're being sold with a special title designation called certificate of destruction. Some states call it non-repairable, some states call it junk, some states call it parts only. And the insurance companies are checking off this designation on the title because what that essentially does is cancels that VIN number. So now whoever buys it at this salvage auction, this insurance auction, can't fix it and put it back on the road. That VIN number is permanently banned from ever going back on the road. Why would the insurance company do that? Won't you get less money for it at the auction? Yes, you do. If the buyer at the auction knows they can never fix it and put it back on the road, they're going to bid less money for that car at auction, right? So these certificate of destruction vehicles or non-repairable vehicles get less money at the auction. Why would the insurance company do that? Well, the reason that insurance companies put that designation on the vehicle is strict liability. Because if they sell it at an auction and somebody fixes it, it goes back on the road, and even 3, 5, 10 years later, that car's involved in some incident that causes damage, injury, God forbid, death, there are legal precedents where somebody can go back and say, wait a minute, some insurance company, Geico, Progressive, State Farm, whoever, totaled this car in 2020. They sold it at an auction to get some money back. They let it go back on the road, and now somebody got hurt. They should have never done that. So they'll go back and they'll sue the insurance company that totaled it, even if it was 10 years ago, because they're going to say you should never have let that car go back on the road. So more of these vehicles, these high-value electric vehicles, are seeing certificate of destruction, parts only, junk, all these different designations, because the insurance companies don't want to have any liability for them going back on the road, even if it's relatively minor damage. We've seen some with very minor damage. What they're afraid of is if that impact, that collision, that physical dynamic force did some internal vibration or internal damage to the batteries, the car might catch on fire. The car might have electrical problems, might be a short circuit. Maybe the high voltage wire that connects the battery to the motors shorts out against the frame, somebody gets electrocuted. Who knows? But this is what we're seeing more of with these insurance auctions. So it's going to be interesting to see how this plays out. There's a lot of differences in the insurance processing of high-value claims with electric vehicles versus traditional gasoline vehicles. Maybe it's just a matter of the market working itself out and learning how to process a different style of engineering a vehicle. Certainly, the repair costs are higher because usually when you crash a car, you don't have to replace the engine, right? Even in a front-end collision, many times, most of the engine is still salvageable. Sometimes if it's really hard, yeah, the engine gets smashed. But usually most collisions on a vehicle, you do not have to replace the drivetrain, engine, transmission, that kind of thing. With electric vehicles, since the high-value item of the powertrain is the battery, and that battery extends throughout the entire floor of the vehicle, many collisions damage the battery. The battery is the most expensive part of the vehicle. In addition, Even if there's not physical damage observed of that battery, you don't know how that high impact affected the battery. Think about it, because here's the thing: a battery is more sensitive than a motor, than a gasoline engine in a vehicle. If for some reason a person is involved in a collision, people get whiplash all the time, or hurt their neck, or hurt their back, even if they don't impact something hard. Batteries are just as sensitive, right? A gasoline engine in the front of the vehicle, it can take a beating. It's, by definition, you've heard the word internal combustion engine. Combustion is a violent event. It's explosions, it's power, there's pistons, things moving. So it's used to vibration and collisions internally. So it can take a beating. A battery is very delicate. Think about your cell phone. You don't want to drop your cell phone from 3 feet, right? Batteries in vehicles are chemical reactions that require a lot of very precise engineering. So a collision is going to have potential to do more damage to a battery than it is to an engine. That proximity to the edges of the vehicle can make that battery very vulnerable. And by extension, the actual motor that drives the vehicle isn't one engine protected in the front of the vehicle. There's 4 of them separated on all 4 wheels. So any of the corners gets hit, and those motors, those electric motors that drive the vehicle, can also be damaged. So the insurance process, the long established 70, 80-year process of insurance claims analysis, underwriting for vehicles, for internal combustion engine vehicles, is now changing, because electric vehicles, all bets are off. It's an entirely different process. So it'll be interesting to see how the insurance companies deal with this, how it affects rates, how it affects the engineering of vehicles. Even in this article, Tesla has announced that they're going to maybe try to change some of the engineering to make it cheaper. And also, Tesla came out with their own insurance company. So maybe they're trying to solve some of this problem internally. Drop some comments below. Let us know what you think about the insurance aspect of electric vehicles.